Before making a decision about relocating to another state, it's advisable to explore the taxation methods that each state applies to retirement funds. Even within a single state, tax regulations can vary for different sources of retirement income. We will look at the taxation approaches for various forms of income, such as earnings from work, investment returns, pension payments, distributions from retirement accounts, and Social Security benefits across all states. Number 1. Maine. In Maine, specific categories of retirement earnings are susceptible to taxation, although a pension exception is in place allowing for up to $30,000 in 2023 and progressing to $35,000 in 2024 and beyond. It's crucial to underline that Maine enacts an estate duty with an exemption threshold established at $6.41 million for 2023. Beneficiaries are exposed to tax brackets ranging from 8% to 12%. In relation to income levies, tax brackets differ, spanning from a minimum of 5.8%, applicable to earnings up to $24,500 for single filers and $49,050 for joint filers, to a peak of 7.15%, pertinent to earnings surpassing $58,050 for single filers and $116,100 for joint filers. Social Security benefits remain exempt from taxation. Pension earnings encounter partial taxation, except for federal pension income, and distributions from 401k and IRA accounts are regarded as taxable. Number 2, Florida. Florida offers a retirement tax environment that is highly favorable, thanks to the absence of personal income tax within the state. In Florida, your pension and all forms of retirement income remain untaxed. Additionally, there are no estate or inheritance taxes to be concerned about. In terms of income taxation, taxation does not apply. Social Security benefits are not subject to taxation. Pensions are exempt from taxation. Distributions from 401k and IRA accounts are not subject to taxation. Number 3, Alaska. In Alaska, there is no state-level personal income tax, implying that your retirement earnings are not subject to taxation. There is no income tax. Social Security benefits are exempt from taxation. Pensions are exempt from taxation, and 401k and IRA distributions are exempt from taxation. Number 4, Hawaii. While Hawaii offers exemptions for certain retirement earnings, it's worth noting that tax rates for taxable retirement income tend to be relatively high. Hawaii also enforces an estate tax, with an exemption threshold set at $5.49 million. Estates surpassing this limit are subjected to tax rates ranging from 10% to 20%. In terms of income taxation, tax rates span from a minimum of 1.4%, applicable to income up to $4,800 for joint filers and $2,400 for single filers, to a maximum of 11%. Social Security benefits are not subject to taxation. Pensions remain untaxed, provided you don't make contributions. Distributions from 401k and IRA accounts are subject to taxation. Number 5, Oregon. Oregon imposes relatively high income tax rates compared to many other states, encompassing a broad range of income levels. The state also includes most forms of retirement income in its taxable base. Furthermore, Oregon enforces an estate tax on estates exceeding $1 million in value. For taxable income, the rates span from a minimum of 4.75%, applicable to earnings up to $3,750 for single filers and $7,500 for joint filers, to a peak of 9.9% for income surpassing $125,000 for single filers and $250,000 for joint filers. While Social Security benefits are exempt from taxation, pensions are subject to taxation. Similarly, distributions from 401k and IRA accounts are also considered taxable under Oregon's tax regulations. Number 6, Washington. In Washington, you won't encounter a personal income tax, ensuring that your retirement benefits remain untaxed at the state level. However, the state does have a capital gains tax set at 7%, applicable to the sale of specific long-term capital assets, such as stocks and bonds, that exceed a value of $250,000 within a single year. There is no taxable income. Social Security benefits remain non-taxable. Pensions retain their non-taxable status, and distributions from 401k and IRA accounts similarly do not attract taxation. Number 7, California. The state of California imposes taxes on the majority of retirement sources. A portion of retirees might encounter a tax rate as high as 13.3% if their taxable earnings exceed $1 million, although the majority of retirees will pay a lower rate. California features 9 brackets for income taxation, excluding the 13.3% bracket, which is a greater number compared to most other states. The tax rates encompass a range from 1% to 12.3%. Social Security benefits are exempt from taxation. Distributions from 401k and IRA accounts are subject to taxation, and pensions are subject to taxation. Number 8. Arizona. In Arizona, the majority of retirement earnings are subject to taxation, although a recently introduced uniform income tax rate for 2023 could potentially reduce your tax expenses. There is a flat rate of 2.5% tax on taxable income. Social Security benefits are exempt from taxation. Distributions from 401k and IRA accounts are subject to taxation, and pension payments are taxable. But certain categories of pensions are eligible for an exemption of up to $2,500. Number 9. New Mexico. Residents of New Mexico are exempt from paying state income tax on their Social Security benefits. Individuals aged 65 and above have the option to deduct up to $8,000 from their taxable income. Moreover, the income of residents who are 100 years old or older is entirely free from taxation within the state. Regarding taxable income, the state imposes a range of tax rates. These rates start at a minimum of 1.7% for single filers with income up to $5,500 and joint filers with income up to $8,000. The highest tax rate, 5.9%, is applied to single filers earning more than $210,000 and $315,000 for joint filers. Social Security benefits become subject to taxation if earned by single filers with yearly income exceeding $100,000 or $150,000 for those married filing jointly. Pensions receive partial taxation, and the same applies to distributions from 401k and IRA accounts. Number 10. Texas. Texas does not impose a personal income tax, ensuring that all your retirement earnings remain untouched by state-level taxation. Furthermore, Texas stands apart by not levying any estate or inheritance taxes within its borders. In the realm of retirement funds, Social Security benefits remain non-taxable. The same holds true for pensions as well as distributions from 401k and IRA accounts. Number 11. Louisiana. Louisiana imposes taxes on some retirement income, but offers a provision where retirees aged 65 and above can exclude up to $6,000 from their taxable income. In terms of income taxation, rates range from a minimum of 1.85% applying to earnings up to $12,500 for single filers and $25,000 for couple filing jointly, to a maximum of 4.25%, which is levied on income exceeding $50,000 for single filers and $100,000 for couples filing jointly. Social Security benefits are not subject to taxation in Louisiana. While public and government pensions are exempt from taxation, other pensions are considered taxable. Additionally, distributions from 401k and IRA accounts are also subject to taxation. Number 12. Mississippi. Income from retirement sources is not subjected to taxation in Mississippi. This includes retirement accounts like pensions, 401k, and IRAs. However, other forms of income, including early withdrawals from these accounts, are still liable to be taxed. The tax rate imposed on this taxable income is currently modest, standing at a flat 5% for the year 2023. It's noteworthy that Mississippi's income tax rate will gradually decline over the next few years until it stabilizes at 4% by 2026. It's also important to note that income sources such as Social Security remain non-taxable in the state. Number 13. Alabama. Starting in 2023, a freshly introduced regulation in Alabama brings forth a tax exemption for retirees age 65 and above on the initial $6,000 of distributions stemming from retirement plans, which encompass IRA and 401k regarding income tax on taxable earnings. A graduated scale is in place. This ranges from a minimal rate of 2%, applicable to incomes up to $500 for single filers and $1,000 for joint filers, to a maximum rate of 5% for incomes surpassing $3,000 for single filers and $6,000 for joint filers. It's important to highlight that Social Security payments continue to be excluded from taxation in Alabama, and the same applies to pension income. However, when it comes to distributions from 401k and IRA, a portion of these withdrawals are subject to taxation. Number 14. Georgia. Georgia imposes taxes on a substantial portion of retirement earnings, yet the state provides generous retirement income exclusions. People who are 62 years old or older can disregard up to $35,000 of their retirement earnings, and those aged 65 and above can overlook as much as $65,000 of retirement income. When it comes to income tax applied to taxable earnings, the highest rate is 5.75% for single filers with income exceeding $7,000 and joint filers with income exceeding $10,000. But starting in 2024, the flat income tax rate will be adjusted to 5.49%. Social Security benefits are not subject to taxation. Pensions are subject to partial taxation, and the same applies to distributions from 401k and IRA accounts. Number 15. South Carolina. South Carolina presents a retirement income exception, allowing you to exclude a maximum of $10,000 from your taxable retirement income. If your taxable income surpasses this threshold, you will be subject to income taxation in South Carolina. The most elevated tax bracket has recently been brought down from 7% to 6%. Tax on taxable income ranges from a minimum of 0%, which is up to $3,200, and to a maximum of 6.5%, which is exceeding $16,040. Social Security benefits are not considered taxable, while pensions and 401k accounts are subject to partial taxation. Number 16, North Carolina. North Carolina applies taxes to a majority of retirement earnings, though the state offers a relatively modest fixed income tax rate. This rate is slated to decrease further in the upcoming years. There's a flat rate of 4.75% on taxable income, but North Carolina's income tax rate is scheduled to progressively decrease until 2027, at which point it will settle at 3.99%. Social Security benefits are exempt from taxation, while both pension and distributions from 401k and IRA are subject to taxation. Number 17, Tennessee. Tennessee stands as another state without an income tax, meaning your retirement income remains untouched by state taxation. Concerns about burdening your heirs with substantial state taxes need not arise, as Tennessee does not impose estate or inheritance taxes. There is no tax on taxable income, while Social Security, pensions, and distributions from 401k and IRA accounts are all exempt from taxation. Number 18, Arkansas. Arkansas is a state that imposes taxes on a wide range of retirement income sources. However, individuals aged 59.5 or above can avail a deduction of up to $6,000 from their taxable income for eligible retirement funds. Regarding income tax applied to taxable earnings, it ranges from as low as 0% for incomes up to $5,099 to a maximum of 4.7% for incomes exceeding $24,300. It's important to note that these tax brackets are applicable to taxpayers with total incomes up to $84,500. Those with higher incomes might enter higher tax brackets more quickly. Social Security benefits are not subject to taxation. Distributions from 401k and IRA accounts are considered taxable, and pension income is also taxable, except for military pensions, which are exempt from taxation. Number 19, Oklahoma. Oklahoma provides a tax exemption for retirees aged 65 and above, allowing them to exclude up to $10,000 of their income from taxation. The state doesn't impose estate or inheritance taxes. Regarding taxable income, Oklahoma's tax rates range from a minimum of 0.25% applicable to income up to $1,000 to a maximum of 4.75% applicable to income exceeding $7,200. While the highest income tax bracket in Oklahoma is comparatively lower than many other states, a majority of Oklahoma taxpayers find themselves in this upper bracket. Social Security benefits are not subject to taxation in Oklahoma. When it comes to pensions, only a portion of the income is subject to taxation. Similarly, distributions from 401k and IRA accounts are also subject to partial taxation. Number 20, Nevada. Nevada stands as one of the states where you can enjoy your retirement income without the concern of state-level income tax. The state also alleviates worries about estate or inheritance taxes. There's no tax on taxable income. Social Security, pensions, and distribution from 401k and IRA are all exempt from taxation. Number 21, Utah. Utah imposes taxes on the majority of retirement earnings. However, in 2021, the state no longer levies taxes on military retirement funds. Those who meet the criteria for eligibility can make use of a retirement tax credit with the potential to receive up to $450. There's a uniform rate of 4.65% on taxable income, while Social Security, pension income, and distribution from 401k and IRA accounts are all subject to taxation. Number 22, Colorado. While Colorado does impose taxes on Social Security benefits, certain retired individuals have the opportunity to entirely exempt their Social Security benefits from being counted as taxable income. The state also provides a retirement income allowance, which can go up to $20,000 for individuals age 55 and above. For retirees age 65 and older, this allowance increases to a maximum of $24,000. For the portion of income that is subject to taxation, there is a uniform tax rate of 4.4%. Social Security payments are subject to partial taxation for specific retirees, but those who are 65 years old and beyond can completely deduct these benefits from their taxable income. Pension funds are also subject to partial taxation. Additionally, distributions from 401k and IRA accounts are considered taxable. Number 23, Kansas. Kansas provides exemptions on retirement income for certain retirees based on their adjusted gross income, although not all retirees qualify. Efforts are underway by state legislators to broaden this exemption to encompass a larger segment of residents. The state levies income tax on taxable earnings within a range of 3.1%, applicable to income up to $30,000, and 5.7% imposed on amounts exceeding $60,000. In terms of Social Security, a portion of it is subject to taxation. However, retirees with an adjusted gross income totaling $75,000 or below are excluded from this tax. When it comes to pensions, they are subject to taxation, but public pensions benefit from an exemption, and distributions from 401k and IRA accounts are also subject to taxation. Number 24, Missouri. Missouri presently provides an exemption for Social Security benefits, excluding them from taxation, for single filers with an income of $85,000 or less, and for couples filing jointly with an income of $100,000 or less. A recently passed law will entirely remove the tax on all Social Security retirement benefits for the upcoming tax year, 2024. Regarding taxable income, the state employs a tax rate ranging from a minimum of 2% up to $2,414 to a maximum of 4.95% levied on income exceeding $8,449. Pension income receives partial taxation, but starting in 2024, public pensions will be entirely exempt from taxation. For distributions from 401k and IRA accounts, they are considered taxable. Number 25, Kentucky. Kentucky imposes taxes on a majority of retirement income sources, but certain types of such income are eligible for exemptions. For instance, a deduction of $31,110 is being applied to retirement plans from the state, private sector, and military. There is a fixed rate of 4.5% tax on taxable income, which will be reduced to 4% by 2024, while Social Security benefits are exempt from taxation, pensions are subject to partial taxation, and distributions from 401k and IRA accounts are taxable.